morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at manufacturing sector constituents results. Of course, we're talking about two stalwarts, West Indian Tobacco Company as well as Angostura Holdings Limited. Now, both groups would have reported marginally increased revenues. However, earnings overall would have declined. Let's take a look at what those results look like in more detail and what investors might expect in the coming months ahead. Turning first to WCO, well, the group reported an earnings per share figure of 5.5 cents per share, a 5.2% decline from the 5.8 cents per share recorded in that prior comparable period. Driving this performance was an improvement in revenue of about 5%, from increasing from 83.1 million to just about 87.2 million. Overall, however, gross profits would have declined from 42.6 to 39.9 million, a 6.3% decrease, with profit for the period ultimately decreasing at 5.2 odd percent from 14.7 to 13.9 odd million in that first quarter of 2026. Now, when we take a look at revenue trends for WCO, we can see that there has been some stabilization and modest growth over the past few comparable first quarter periods, growing from that base of 75 million in that first quarter of 2024 over two consecutive periods to the current 87 odd million. However, one of the major drivers for performance in terms of WCO would have been that decline, or consistent decline rather, over the past few quarters in terms of its operating gross profit and profit after tax margins, with that operating or gross profit margin rather in that green segment decreasing from just around 74% in that first quarter of 2022 to just about 45.7% in the most recently concluded quarter of 2026. However, profit after tax margins have also declined, but that rate of decline has slowed a bit from 18.1% in that first quarter of 2024 to just about 16 odd percent in that first quarter of 2026. Of course, factors including increased input costs and excise duties obviously weighing on the performance of Angostura as well as WCO in this particular instance for the first quarter of 2026. Now, from a trailing 12-month earnings per share perspective, we can see that there has been some continued decline in terms of that overall profitability, with that trailing earnings per share falling to 43 cents per share on that trailing 12-month basis. Our trailing dividends per share also declining to just about 41%, and that 41 cents per share rather, with that trailing dividend payout ratio fluctuating fairly wildly over the past few comparable periods, but in the most recently concluded period on a trailing basis ending up at around 96%. Now, at a price of $2.86 per share, WCO is trading at that price to earnings level of 6.7 times, which is below the sector average of 8.3 times, and above, with a dividend yield of 14.3% above that sector average of 11%. So with improved revenues in mind, however, keeping a very close eye on those narrowing margins, continued market and industry challenges, including those recently increased excise duties, but of course, relatively attractive valuations. Bourse is maintaining a market weight rating on WCO for the time being with a watch outlook. Turning very quickly to Angostura Holdings Limited, where the group would have reported an earnings per share figure of 9 cents, which was an 18.2% decrease from the 11 cents per share recorded in that prior comparable period of 2025. Now, like WCO, revenues would have improved 2.6% from 220 to just about 226 million, with gross profit margins, however, also declining 12.5% from 108.7 million to just about 95.2 million. Profit before tax declining at 17.9% from 33.3 to 27.3 million, with profit for the period ultimately declining 14.6% from 22.7 to just about $19.4 million in that most recently concluded period. Like WCO, Angostura would have recorded some improvements in overall revenue, with that 2.6% growth from $221 to $226 million in revenue, and again a second consecutive comparable period of revenue growth. However, in similar fashion to WCO, Angostura would have experienced also declining margins, with that profit after tax margin, for example, declining from that first quarter of 2022 of around 14% to just about 8.6% in that first quarter of 26. Gross profit margins also coming under some pressure, as well as operating profit margins falling to that 11.7% in that yellowish colored line. Now, at the price of $10.83 per share, the group is or Angostura Holdings is trading at a price earnings ratio of just about 15 times, which is well above the sector average of 8.3 times and offers investors a dividend yield of just about 3.6%, considerably below the current dividend yield sector average of 11%. So with that revenue growth in mind, however, keeping a close eye on those lower margins as well as elevated valuations, particularly relative to that sector average, Bourse will be maintaining a market weight rating on Angostura for the time being, with a stable outlook as it continues to navigate a fairly dynamic environment in terms of its the excise and regulatory environment as well as the overall sales environment. But that's it for this week's edition. For more information, you can give us a call at 226-8773 or 2Bourse. Email us at info@boursefinancial.com. And of course, you can check out our website at bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.